Fixing profits is scary. But do you know what's scarier? Watching it disappear. The problem isn't the market, and it isn't the strategy. It starts with not deciding to exit, even when it's time. In this video, I'll talk about the psychology that keeps you from exiting and the signs that experienced investors use to fix profits. And most importantly, how to create your exit strategy so you never regret a missed moment again. Why is it so hard to lock in profits? You are on the plus side. Everything seems to be going according to plan, but you can't bring yourself to sell. Why not? Because you're no longer looking at the chart objectively. This asset has become special to you. The first one that gave you X2, X3, or simply turned out to be your discovery. It's called the sacred asset phenomenon. When a coin stops being a tool and becomes part of your identity, you didn't just invest. You found yourself in a relationship. It's at this point that the second effect, ownership, comes into play. Psychologists call it the endowment effect. When you own something, you automatically overestimate its value, even if the market signals otherwise. Think about it. If you didn't have that coin right now, would you buy it at the current price? Or do you hold it because it's a pity to sell it? What if it grows again? It will definitely go up now. And now you are no longer an investor. You're a keeper. No strategy. No exit point. And finally, the third point, which is rarely talked about at all, profit-taking causes physical pain. Seriously, the brain perceives it as a loss. Yes, even when you come out with a gain. Because you're not fixing the potential, you're fixing the boundary. And the brain always wants just a little more. That's why you might hold the coin to the last, not because you believe in the project. It's because you're not ready to make the final decision and take responsibility for it. It's a trap that's hard to get out of if you don't realize what's happening to you. Ask yourself this question. Are you holding on because you believe in growth or because you can't decide to get out? If it's the second, look at the market not as chaos, but as a structure. Imagine you are already in the black, but instead of joy, there is anxiety. You open the chart every hour, you look at the candlesticks, you refresh Twitter, you scroll through your chats with friends to find a single confirmation that it's too early to exit. That's not a strategy. That's anxiously waiting for a miracle. And miracles are not tools. That's why you need to rely on structure rather than feeling. There is a theory that many professionals use, Elliott waves. It explains how any trend develops. There are 5 main waves of trend development. The first wave. The market is just starting to move. Almost no one believes in growth. Volumes are low. Only a few people buy, those who feel or know more than others. Second wave. A slight correction. Those who doubted are exiting. Those who entered are testing their endurance. Third wave. The main momentum. News, analysts, YouTube. Everyone is talking about growth. Funds in the crowd are getting involved. The price is flying. That's the heart of the trend. Fourth wave. The pace is falling. Profit-taking begins. Those who entered early are exiting, and they do it quietly, and the market is kind of still holding. Fifth wave. Euphoria. Everyone's buying. Messengers, Twitter, friends, everyone's on it. This is where most people lose, because there's no one left to keep buying. This is the euphoria. When a coin is on everyone's lips, when every second person is on it, when YouTube says, there's still potential, you feel like you're missing out on something great. But at moments like that, the market no longer grows logically. It's breathing the expectations of the crowd. Confidence is when you follow your plan. Euphoria is when you hear only those who confirm your desire to stay. And this is one of the most dangerous moments. Professionals get out before the fifth wave, sometimes right on the fourth, because they know they don't have to take all the movement. The main thing is to take what's yours and keep it. But if you're left behind, you have to be especially careful. The fifth wave is the most deceptive. It seems like a continuation of growth. The price can renew the maximum, but it is not the same growth. It's the final exhalation. If you're still in a position, look beyond the chart and not at it. Here's what you should pay attention to. The first signal is volume. Price is rising and volume is falling. That means the big players are no longer buying, and the small players can't give the same impulse. Buying is not out of conviction, but out of fear of missing something. The second is divergence. This is when the chart makes a new peak, but the indicator does not. For example, MACD, the price is above the previous peak, but the top of the MACD histogram is below. This is a clear signal that the movement is running out of steam. This is how the market warns those who know how to listen. The third is Google Trends. When the crowd is Googling how to buy, the smart ones have already sold. Increased interest in an asset on search engines is not a sign of the beginning, it's often the finale. Just remember how it was before. In 2017, when Bitcoin was heading toward $20,000, everyone was writing about the new economy, and then winter came for 2 years. In 2021, Doge made X100. And then, when Elon Musk was joking on Twitter, and Google was exploding with how to buy Doji requests, the strong ones were on their way out. Terra in 2022, billions in TVL, thousands of forever holders, until it all went to zero in a matter of days. All these stories have one thing in common. The crowd came in at the end, and those who didn't wait just a little longer were able to get out. You can already see that the market is losing momentum. Volumes are declining, indicators are turning around, interest in search engines is off the charts. Everything points to the end of the movement. But despite this, you continue to hold. Why? Because there's doubt inside, and neither charts nor signals will help here. This is where you have to turn to yourself. Ask yourself, if you did not own this asset right now, would you buy it at the current price? If the answer is no, then the logical next question is, why are you holding it? There's another filter, the friend asked for advice situation. Would you recommend someone to buy this coin right now? Probably not. Then why give the opposite advice to yourself? If you're still in doubt, write down in advance the price you're willing to sell at, calmly, without emotion. And when the market reaches this mark act, because in the moment, the decision will be made not by your mind, but by fear. Profit taking is not weakness. It's maturity. It is the point at which you stop hoping and start managing risks. And if you've already realized it's time, a new fear arises. What if it's too early? What if it's still growing? It's at this point that it's especially important to have not only the intention to go out, but also a concrete plan. And here's another important point. Professionals almost never exit in one fell swoop. Funds lock in profits in installments. 30%, then another 30%, and only then the remaining balance. They don't try to take the whole movement. They take their own and exit with a profit. They don't have the goal of guessing the maximum. They have a goal of preserving capital and staying in the game. And you can use the same principle. First, don't try to catch the top. This is a myth that has zeroed out more deposits than any bear market. If you're in profit, the goal isn't to maximize, it's to preserve. Second, DCA on the exit. Yes, the same method that works on entry. Gradual, rational, especially if you don't want to make decisions at peak times. If you haven't watched the video where we went through the DCA strategy in detail, you should watch it. There we showed not only the averaging scheme itself, but also two tactics that almost nobody uses: fire protocol and panic fund. They save you when things don't go according to plan. Especially for you, I prepared a mini checklist for exit, a simple tool to check yourself before taking profits. When you are in a position, emotions always prevent you from seeing clearly. To avoid impulsive decisions, check yourself on the checklist. Would I buy this asset at the current price? Would I recommend it to a friend right now? Is my exit plan written down in advance? Does the chart show divergence, growth without volume, or signs of overheating? If at least two answers are yes, it's time to act. Not when you're scared, it's when you see it's time. Profit taking isn't you've given up. It's a choice you've made, not to get your hopes up, not to beg the market for more. It's about taking a profit and say, I've done my part. It's no longer my risk. Professionals respect profit. Beginners hope for a miracle. And the last thing, transfer into stables, not the next hot asset. Locking in profits is not a step into a new trade. It's a pause, an opportunity to reboot and look at the market with a cool head. By the way, if you hold Solana, you can't just wait, but make money on it right now. Connect a Telegram bot that tracks your staking. How much SOL is running, which validator you've chosen, how much income you've already received. Safe, transparent, and right in Messenger. The bot will also help you choose a reliable validator, so you don't lose income due to downtime or hidden fees. If you're not already using staking, you're essentially losing money on a daily basis. The link to the bot is in the description below this video. Get connected and check it out. How many SOLs may have already started working for you? Today, we looked at situations when you should fix profits. Not on intuition, not on emotions, but on signals that really work. You don't have to guess the market, but you do have to manage your decisions, and now you have everything that really matters. If you want to control the market, start by controlling yourself. And if you want to learn more, click subscribe. We're not talking about noise here. We're talking about the essence. No guesses, no panic. Only a systematic approach and real strategies that work over the long term. Further, we'll talk about how to save even when everything is going down. In the next video, DeFi insurance, when it really works, and why it's often remembered too late.